Let's begin with this one. With central banks such as the Fed, the ECB, and the BOC charting seemingly different paths, how are global interest rate trends influencing capital flows and pricing, particularly into African markets?
Well, it's been very interesting to see this divergence between the different central banks, and what that really means is that capital flows are heightened. I think, in particular, if you look at the U.S. Fed and the prospect of further interest rate cuts there, investors will be looking for other areas to park their cash, in particular, and that could be positive for emerging markets generally, where cash rates are slightly higher, and in particular where cash rates aren't necessarily coming down. I think a country like South Africa could be a beneficiary within the emerging market universe, just given the liquidity that is on offer, and then the interest rate differentials. For example, if the US cuts interest rates, suddenly your cash rates are lower. If the South African Reserve Bank keeps rates on hold, there you will comparatively find a higher than expected cash return on your money.
So, here at home, the Reserve Bank recently cut interest rates by 25 basis points to 7%. How much of a relief is this for markets and corporate borrowers? And what signals might it send about inflation and growth going forward?
Yeah, so I think that the 25 basis point cut was widely anticipated. Interest rates have been restrictive in South Africa for quite some time, while inflation has been quite benign. But I do think that this is probably the end of the cutting cycle. We know the South African Reserve Bank is looking to anchor inflation at lower levels, and that will have a longer term positive impact on borrowing costs, both for the state as well as for South Africans generally. But that necessitates them to be a little bit more stringent near term in terms of interest rates. So I think we're probably at around a neutral level at the moment, which means that interest rates aren't necessarily going to disrupt growth in any way or boost growth in any way. And then, of course, we just have to watch inflation quite carefully. We expect it to tick up just because of base effects in the main, and more recently, we've had further administered increases locally. And it's going to be interesting to see how the next year or so plays out, because we still don't have full buy-in from Treasury in terms of this 3% target. And you really need that and a commitment to keeping administered price increases, so electricity, water, rates, and taxes, those prices in check in order for the Reserve Bank to meet that target of a 3% inflation level.
We've also seen this week swings in commodity prices like oil, gold, cocoa, lithium. How are these translating into economic pressures or perhaps even gains for resource-dependent African economies? And I'm looking at lithium, one of these critical minerals that's so badly needed by the West.
Yes, unfortunately, lithium is just has ample supply, and I think that that is really what has derailed lithium prices over the last couple of years. I think the expectation was also that you were going to really see a massive push and very long-term high growth in battery electric vehicles, for example, and that has tapered off somewhat, but I think that's more a function of kind of the external environment, uncertainty, the global growth outlook coming under a little bit of pressure, perhaps derailing that transition somewhat. When it comes to the other commodity prices that you mentioned, oil, we've seen a really nice tick up more recently, but it remains a push and pull between demand and supply, because I mentioned the growth concerns that is really weighing on the demand outlook. And then in terms of supply, you do have kind of geopolitics playing a role, with Russia still supplying oil to the likes of India and China, but the US not necessarily liking that. OPEC still continuing to push up supply as well. So it's an interesting dynamic. Unfortunately, it just leads to quite a bit of uncertainty. In terms of cocoa, it's also been very, very interesting because there are drought conditions in some of the cocoa producing regions in Africa, and that has really boosted the price. But at the same time, again, the demand environment remains very uncertain. The rise of GLP-1s, so those are the weight loss drugs. The tariff impact on anything that is exported to the US. All of these things are having a dampening effect on demand for chocolate and by extension for cocoa. And then gold, of course, benefiting from all of this chaos, receiving a lot of interest as an investment holding because of its safe haven demand, and also still persistently high central bank buying because of the geopolitical issues that we are facing globally.
If we take a look at some of the major economies and major countries, Nigeria, South Africa, Kenya, maybe even Egypt, tell us a little bit about what dominated market activity this week. Were there any sort of sectoral highlights the investors should be taking note of that struck your attention?
Yeah, I think if we look at Nigeria, there was some agreements between Nigeria and Brazil set out during the week, and Petrobras, Brazil's biggest oil producer, will be returning to Nigeria, which I think could boost the oil industry in that jurisdiction. In Kenya, we saw really strong equity markets over the last week, really driven by the banks and the insurers. And in South Africa, it's been, again, all about the gold miners. We've had some results coming through. They haven't been as good as what the market expected, but that sustained higher gold price, making the outlook still look pretty decent, and gold miners doing well as a result. We've actually had a lot of results coming through from South African companies. At this point in time, it seems quite mixed, looking a little bit better on the consumer side, things a little bit less enthusiastic on the mining side. But with the miners, we must always remember it's backward looking. You're looking at a period where commodity prices were under pressure, metal prices in particular, with the exception of gold, and the way forward looks a little bit better. We've recently seen some positive movement there.
As we can't talk about markets in the world economics without Donald Trump. And I'm curious about this issue regarding Fed Governor Lisa Cook suing former President Trump over an alleged attempt to force her removal, a challenge potentially to central bank independence. I suppose, given America's position in the world, this is something that we need to be watching, or is it?
Yeah, absolutely. I think it is critical that central bank independence be maintained, not only in the US, but globally. What I find quite strange about the whole story is it really is an attack on the central bank of the biggest economy in the world. But markets aren't really reacting in kind. You can imagine how the reaction would have been if any of the African leaders did something like this with regards to the central bank. It would have been absolute carnage in terms of financial markets. So in that context, I think it is particularly concerning for us when we look at the US and we see something like this happening and markets not really reacting. It tells us that markets could perhaps be complacent, and that complacency could lead to big movements later on if this continues or if something goes horribly wrong. The central bank is independent for a reason. It needs to exercise its mandate without fear or favor or undue influence. And the reality is that Trump is directly trying to influence what rates look like in the US. We've heard that he is looking at a 1% interest rate. That can have massive consequences for inflation. While it will sustain the economy near term and probably boost growth, if inflation gets out of control, it can have a devastating impact on an economy. And if it's the largest economy in the world, there's no question it will have an impact on everyone else.
post the other day saying that, Donald Trump wants to drop the inflation rate, but he's got the tools already by not doing mad things like these tariffs that he's pushing all over the world.
Yeah, absolutely. Or forcing interest rates lower than they should be. Because lowering interest rates, it'll boost growth, but it is by definition inflationary. They also have an inflation target of 2%. They haven't hit that 2% in several years. So they do have sticky underlying inflation, and they need to be very careful, yeah. But knowing what we've seen, well, at least seeing what we've seen over the last 6 months, and certainly in Trump's first term, his way is his way, and we'll just have to watch what he does and adapt accordingly.
Zimbabwe, I mean, their currency story is one that almost reads like one of these soap operas. They keep trying to reintroduce the local currency. They're rebranding it at the moment. What's your take? I mean, most Zimbabweans never buy into this story, and they've really struggled to trust this currency. Could they have things changed sufficiently for people to be inspired, or you as an investor, you're looking at this and saying, we've seen this story so many times before?
Yeah, you've hit the nail on the head with the word trust. It's a matter of trust. In order for a currency to actually be a usable currency, you need to have people trust that the money, that the paper in their hand or the money in their bank account will be worth something in future. Without that trust, people will not necessarily want to hold it. They'll feel much safer being in US dollars or South African rands, for example, because those are currencies that they trust will have value in future. And therein is the issue. I think there's a trust deficit probably between officials and the population. And the population have seen this before. They've had hyperinflation. They've had their old Zimbabwean dollars deteriorate in value rapidly. And it's not that long ago. It's a difficult situation because you would want your own currency as a sovereign nation in order to effectively utilize tools like monetary policy to stimulate demand or to bring inflation in check. You cannot do that when your functional currency is the US dollar. So they're in a very difficult position. And I think just given what happened with the most recent attempt, I don't think necessarily that trust is there at the moment in order for them to successfully execute. But I don't blame them for trying because it really is something that they need in order to improve and get a grip on the economic situation in that country.
Chantal, well, we trust you and your insights. Thanks so much indeed for sharing them with us every week. Thanks so much for your time.
It's a massive pleasure.
That was Chantal Marx, who's the head of investment research at FNB Wealth and Investments, taking a look at some of the big economic stories that played out in this past week. Call us.